Yes, good morning, students. Today we are going to discuss the topic about managerial economics, introduction, definition, meaning, and scope. Now we share the screen. Yes, this is the introduction of managerial economics. So this subject was first introduced by Joel Dean in 1951. The branch of economics is essentially concerned with the application of various economic concepts and decision making. So usually the decision making is very important in managerial economics. So in that part, they are wanted to some tools used by economic tools. So that is why it is called managerial economics. It is introduced by Joel Dean in 1951. Then definition. It is a study of allocation of the limited resources available to a firm or other unit of management among the various possible activities of the unit. So the study of allocation, how they are allocated the resources to a firm or a unit. So that is called managerial economics. This is also one of the definition given by W.R. Henry and W.W. Hayes. This is the meaning. Simply, we say managerial economics is the integration of economic theory with the business practice for the purpose of facilitating decision making and forward planning by management. So, they wanted to facilitate the decision making and planning by the management. That is why they are use the economic theory. So, this is called managerial economics. Simply, we say the integration of management and economic theory is called managerial economics. Then concept. It's an important way of thinking about analytic the problems that arise in both profit-seeking and non-profit-seeking enterprises. So in the concept says not only the profit-making, the individual group of companies, it is also useful for the non-profit enterprises also. Then concept. So the big gap between the problems of logic and then the managerial economics is the bridge between the problem and solution. That is why it is a practical contribution that economic thinking can make to top management policies also. Then this is the scope only. So what are the inclusions are included? The management decision problems and then management schemes, that is the operational research or and then the economic theory. So these all are called integrated in managerial economics. This is a scope only. What are the content are included in this managerial economics? That is called scope only. So finally, optimal solution to managerial decision problems. So which is the best solution for the problem? So that is called optimal solution. So these all are included in this scope of managerial economics. Usually the use of economic theory and decisions science methodology to solve the managerial decision problems. This is the scope only. Then next one. So demand analysis and forecasting, cost and production analysis, pricing decision policies and practices, capital management, profit management. So these all are included in managerial economics. That is why this is called scope of managerial economics. This is a part C question. Usually 15-mark questions, they ask the scope of managerial economics. So simply we explain one by one. Demand analysis and forecasting. Already we know the analysis means what is what only. We are each and every demand analysis. That is called demand analysis. How much the demand is arises. So accurately estimate of the demand in future is called forecasting. So these two are the first scope of managerial economics. So upon analyzing these factors, they're affecting the demand for a product, and then managers can decide on the production. So how much they wanted to produce in future, that is called forecasting only. How they are forecasting? Only they are estimating the current demands. Then managers move to predict the future demands for the product. So this is referred to as demand forecasting. The next one, cost and production analysis. Cost means how much the expenses are incurring in the production. So that is called cost. And then production means how much the production is or what is the way of production. Suppose it is the man-made goods they are producing, or it is a machine-made, or it is a capital-oriented, or it is a human resource-oriented. That is called production analysis. Which is the best for that product? So that is called cost and production analysis. So cost analysis is an important exercise for any company, because without cost analysis, they cannot maintain the production in the huge level. And also the component of cost is it's always exists, since all the elements deciding expenses are not generally known or controllable. Then only they will be control the cost in the production unit. The next one. So the topics are covered during cost and production analysis or production function, least cost combination, factor productiveness, returns to scale, cost classification, cost output relationship. So these all are, we are discussed in the upcoming classes. Just we give the introduction. So that is why the scope of economics or the managerial economics. So this is the pricing, decision, policies and practices. These are called 4 P's. How much the prices are fixing for the goods and services, that is called pricing decision. And policies, which policy is suitable for the production unit, and practices, how they are practicing, how they are selling the goods in the market. So this is the third scope of the managerial economics. And then fourth one, capital management. So the capital means it is a important practice, and then how much the capital expenditure is basic in the function. So it is a equi-marginal principle. Equi-marginal means if the capital and the outcome is a maximum level, or it is a equal level, that is called equi-marginal principle. So the funds should be kept in the bay when the managerial returns are less than in other. This is the fourth concept or the fourth scope. Then fifth one is profit maximization. All the industries are only producing the goods and selling the goods in the market. Is the aim is only the profit maximization. That is why they wanted to manage the profit. So the profit and the profits reflect the success of a company. So after all the analysis, it all rolls down to profit. So this is called why study managerial economics or importance of managerial economics. So the managerial economics only give the micro and macro theories only in practical application. And also it is dealt with during the capital management, cost capital, rate of return and selection of projects, whatever may be the managerial economics only the base for these concepts or the contents. And then maximizing profits. The managerial economics only, they only know the cost aspect and how to allocation of resources and long-run decision making. So we need to study the managerial economics in the management level also. And also they wanted to evaluate and then it's investment decision also and frame the best capital budget policies also. Profit management is considered as a difficult area of managerial economics. So it is a very important aspects covered, profit policy and the techniques of profit planning. That is a break-even analysis, cost volume profit analysis. So these all are the scope of managerial economics. So this is the introduction and then meaning, definition and scope also. The upcoming classes we will deeply explain. Thank you, students.